We saw some movement in the markets recently, specifically the Dow Jones, the US 30.
Yeah, that's right. It dipped about 1.3%, not insignificant.
And it seems a big part of that story was UnitedHealth Group, UNH.
Absolutely. They were a major driver. Their shares took a really substantial hit in pre-market trading.
How substantial are we talking?
We're looking at around 20%, a big drop.
Wow, okay. 20%. So what was behind that significant fall?
Well, the main trigger was the company lowering its outlook for the full year.
Ah, the forecast. So they're expecting things to be tougher going forward.
Exactly. They specifically cited increased costs. Costs are eating into their expected revenue and their earnings per share more than they'd anticipated.
That's interesting because I saw they actually added quite a few customers, didn't they? Something like 780,000?
They did, yeah, since the start of the year. But, adding customers doesn't automatically mean higher profits if your costs are rising faster or other factors are at play.
Right, okay. So customer growth wasn't enough to offset the cost pressures.
Apparently not. And they also mentioned something else changes within Optum Health's membership structure.
Optum Health. What happened there?
It seems those changes led to lower reimbursement levels, so less money coming in for certain services or members, which, negatively impacts the bottom line.
Got it. So higher costs and lower reimbursements, a sort of double whammy.
Pretty much, yeah. It explains why that positive customer growth didn't translate into a stronger financial picture, or at least a stronger outlook.
And this UnitedHealth news, it didn't just affect them, did it? We saw movement elsewhere.
Oh, definitely. It created a ripple effect across the whole healthcare sector. It's quite common, really.
Which other companies felt the impact?
Well, we saw stock declines for competitors like Cigna, Elevance Health, Humana, and even CVS Health.
So investors saw the issues at UnitedHealth and got nervous about the whole sector.
It seems that way, yeah. It highlights how interconnected these major players are. Bad news for one can cast a shadow over others, at least temporarily.
Makes sense.
Yeah.
Now, let's look a bit closer at UnitedHealth's actual numbers. You mentioned the lowered outlook, but how did their recent performance look, say, first quarter?
Actually, their Q1 2025 revenue was pretty strong on the surface. It came in at $109.6 billion.
$109.6 billion. How does that compare?
That's up 9.8% compared to the same quarter last year, so nearly 10% growth year over year.
So revenue is growing, but the market reacted so negatively, it really was all about the future guidance then.
Exactly. That's what spooked investors. It's often less about the past quarter and more about what the company signals is coming next. Lowering the outlook is a big red flag for the market.
So what exactly is the new forecast? You mentioned earnings per share.
Right. So for the full year 2025, they've revised their adjusted earnings per share, the EPS, to a range of $26 to $26.26.
$26 to $26.50, and what was it before?
Their previous forecast was quite a bit higher, $29 to $30 per share.
Wow, okay, that's a substantial downward revision, more than $3 at the midpoint.
It is. And importantly, this new range is also below what market analysts were expecting.
Oh, really? What were analysts predicting?
Analysts' consensus was actually above $29.70. So the company's new guidance is significantly lower than both their own previous expectations and what the market was anticipating.
Right. You can see why that would cause concern. It paints a less rosy picture for the year ahead.
Definitely. It shows how crucial these forward-looking statements are. A company's current health is one thing, but its projected future performance heavily influences that stock price.
It's a really clear example of that market dynamic, isn't it?
It really is. For anyone investing or even just following the markets, it underlines why paying attention to these earnings reports and, crucially, the company's own forecasts is so important.
Absolutely. It's not just about the past results.
Nope. Future expectations often carry more weight.
And speaking of investing, maybe we should just touch on risk for a moment. This kind of volatility reminds us, doesn't it?
It does. And particularly when people use leverage, perhaps through things like CFDs, contracts for difference.
Yes, CFDs. They come with significant risks, right?
Very high risks. The potential for profit is amplified, but so is the potential for loss. In fact, data consistently shows a large majority of retail investor accounts lose money trading CFDs.
What kind of percentage are we talking about?
The figures usually hover around 73%, so nearly 3/4 of retail accounts lose money with these instruments.
73%. That's stark. It really emphasizes the need for caution.
Absolutely. Understanding the product, the leverage involved, and the potential downsides is essential before even considering that kind of trading. It's not for everyone.
Good point. So wrapping up, the situation with UnitedHealth is a potent reminder of, well, market complexity.
Indeed. Company performance, future outlook, sector sentiment, investor psychology, it all weaves together.
Which underscores the need for anyone involved in the markets to do their homework, wouldn't you say?
Thorough research and careful consideration are always key. Things can change quickly.
Well Well said. Okay, that's about all the time we have for this analysis today. Thank you for joining us.
It's my pleasure.
And thank you to everyone listening. If you found this discussion informative, we'd really appreciate it if you could like this and subscribe for more insights into what's moving the financial world.
Yeah, definitely helps us out.
We'll be back again soon to explore another key topic. Until then, goodbye.
Goodbye, everyone.